Travis, we've discussed how the U.S. consumer likes to spend on things and experiences.
Yes, they do.
And they'll do it, they'll spend down their savings or run up their credit cards to get that done too.
Mm-hmm.
Well, the government, they can spend too.
That is very true.
The Congressional Budget Office most recent projection for the fiscal year of 2024's budget deficit is $1.9 trillion, and that's with a capital T, trillion.
We seem to be using that word a lot in these videos lately.
I know, it's either trillions or billions, or millions don't even exist anymore.
No. So, Steve, the government conducted large debt sales to cover the gap you're talking about between spending and the revenue that they generate, via taxes. And on the surface, you would think that this growing debt load would lead to some market disruptions in the treasury markets.
Yeah.
But so far, it hasn't. And there's a variety of factors to help explain this, what I'm going to call tranquility. Tranquility in the treasury market. So, first off, you have safety and liquidity.
Yeah.
Right now, treasuries offer reasonable yields again, with virtually no risk, and you couple that with a large, highly liquid market, and it attracts global investors. Next, U.S. treasuries are still considered the world's dominant reserve asset, so foreign banks and foreign governments hold them as part of their reserve, and that also bolsters demand for the highly liquid market, leading to that tranquility.
Yeah, that's true, Travis. And treasuries also are tied closely with expectations of short-term rates set by the Fed and compared to other quote-unquote safe government bonds of foreign countries.
Yeah.
U.S. treasuries often offer higher yields, making them relatively attractive. You mentioned liquidity, Travis. In 2023, the treasury market traded about 190 trillion with a T again worth of treasuries. That's 7 times the total market size. That's hard to, that's really hard to comprehend that. That kind of liquidity is obviously very attractive. So while the U.S. fiscal situation deteriorates, with projections of increased deficits and debt levels, the bond market stability suggests that investors, they're really not alarmed. And I'm just going to say yet.
I think that's the key word, Steve. It's not a sustainable pattern.
It really isn't.
That we're on. And the current fiscal situation is unusual for peacetime. I mean, normally large deficits are associated with wars or other events like pandemics, most recently the pandemic, right? So the question now is whether the debt burden is sustainable and will the continued growth curb investor appetite or enthusiasm for U.S. debt, demanding higher yields in the process. So if yields go up across the curve, that's a higher interest debt burden that we'll have to pay, and that's obviously going to hinder future growth because that's money to pay debt service versus being invested elsewhere, right? So the expanding deficit and debt levels will likely be major topics in the upcoming political debates and elections, and it's been a pretty eventful election season thus far.
Yeah, this last weekend showed that, and the weekend before as well. So.
Absolutely. Stay tuned.
Yeah. Travis, this has been great. I look forward to it next week.
Look forward to it as well.